Everybody, welcome to your Monday edition of the Trader Merlin Show. Let me get that camera zoomed in a little bit there. You know, that's what happens when I do all kinds of work on my setup here. Things get a little bit wonky. Got lights over here sitting in the picture. Anyway, hope you all had a great weekend. Did something fun and entertaining. A little piece of news. I decided, just today actually, I'm not doing a show tomorrow, and the main reason is it's April Fool's. So I'm not going to do a show just because on April Fool's there's always kind of weird crap that goes on in the markets. I hate quoting things that are miscorrect and pranks and stuff like that. And I got a million things going on. So I'm not going to do a show tomorrow. We'll join us. We'll come back to things on Wednesday, April 2nd, when all hell breaks loose. So just want to let you guys know that. No show tomorrow. That is not an April Fool's joke. That's legit. I'm not going to do a show tomorrow just because. And I'm also testing ultra low latency on the YouTube stream today, which I usually, again, I forego that with you guys because sometimes it causes issues on your back end. But I did a speed test here today. We're running pretty good fiber, so should be a good show today with very, very low latency. All right, so tomorrow, I guess there'll be more posturing and jawboning about the tariffs. And that's kind of where I want to start today. I know we've discussed this a lot, so let me just run through some of them, and then I'll just move on and leave this one alone. But it's really, what's his next act? What's the next scene in this reality show that you and I are all a part of when it comes to the United States and tariffs and President Trump? So there's a whole list of things happening, and I mentioned some of them the other day, but I wanted to actually just bring up the whole list just so we have an idea of what might be coming. And again, when you look at all these things, just remember that right after this, there is the potential for significant retribution or retaliation from foreign countries. So here's what we've got cooking. Our upcoming tariffs could look like this. Number one, we talked about 25% tariff on foreign-made cars and light trucks. Okay, we all are kind of pricing that one in, I would think, with Ford and GM and U.S. manufacturers, although there still is a lot of uncertainty as to what exactly is there in that, the tariff decision. Number two is 25% on countries buying Venezuelan oil. I thought this was kind of interesting, and I don't know the major purchasers of Venezuelan oil. I'm going to assume it's going to be China. I'm going to assume it's going to be India, other countries that we may not have the greatest relationships with, and that's just putting further pressure on those countries as well to stockpile more tariffs and put more pressure on Venezuela. I mean, look, if you're Trump at this point, why don't you just say you're going to invade Venezuela and take over Venezuela? I mean, come on, we're going to take over Panama, we're taking over Greenland. Why stop there? Let's go all the way into South America. We've got... Yeah, anyway, let's so that's 25% buying Venezuelan oil, which I thought was an interesting tactic. Next is going to be 25% on agricultural products. And again, we still don't know exactly what that is. We don't know all of the agricultural imports that might be hit. I think that right now it's a lot of speculation about what might be included on that list, but certainly could impact our markets, our grocery stores, etc. Continuing on that list, India, Japan, South Korea, Brazil, Mexico, Canada, EU, China, all facing potential reciprocal tariffs. And I read something today about, Germany saying, look, if you do more retaliatory stuff towards us, we're just going to do it even more aggressively. So, for me, what does it ultimately spell out? Well, it means for me personally, as a citizen, I'm probably going to be buying a lot less over the next coming months. I'm one of those people, I have no problem reining it in and just kind of being a financial hoarder and not doing much. The other side of me looks at this and says, from a grand scheme of things, it raises even more questions in my mind as someone who's traded for 28 years. It makes more questions of what does the future look like? It makes it murkier and murkier looking out saying, oh, I have a clear idea where things are going to go. Not at all. So it makes me more pessimistic on the markets in the long run, or at least the intermediate term, while these tariffs and this kind of posturing gets displayed. So my sentiment is shifting more bearish, and I know Oliver is probably like, oh, great, Merlin bearish again. Heaven forbid the thought, Oliver. Heaven forbid the thought. But yeah, all of these countries could potentially get some pretty big tariffs. Steven says, tariff agriculture products and sign a bill for $100 billion. More farmers to go on top of the $70 billion already. Get it? Yeah. Well, yeah. Subsidies. More subsidies. We'll just do more subsidies. You also have potential tariffs on lumber, copper, pharmaceuticals, semiconductors. There are obviously a tremendous amount of different things that are going to get tariff pressure. And I don't know how much of this is going to come through, how much of it will be finalized, but that all is supposed to be done on Tuesday, right? He's going to go out there and they're saying there's a whole bunch of new tariffs that are going to be added to this on that Tuesday presentation. I have no idea. You know, I've already voiced my opinion on this one, and my opinion is that when we look at this list, this is like the hard right edge. It's looking at one side of the chart, and this is the extreme, right? These are kind of the maximum ceilings that have been put in so far. My guess is some of these will get put into effect. Some people will get forgiveness, like, oh, and again, I'm making this up. Like, oh, okay, Japan, you know, we're going to extend yours 30 days, and some other Mexico, maybe we'll give you 60 days. There will be some exceptions here, but I do think that ball will start rolling down the hill here of tariffs are going to be put into effect and start to build up. So all of this, in fact, happening on Tuesday. Who knows the extent or the deepness of some of these tariffs? For me, it's just uncertainty, and I don't like that. So actually, today was a great trading day, honestly, but this, for me, in the future, gives me more of a bearish bias. So Oliver, come to the dark side. Come to the dark, become a shorter, short the markets. No, I actually went, it's funny, I had the S&P short today and closed that out as we came into the demand zone, and then ended up going long on the future side of things. So it was actually a pretty darn good day. Do you believe Trump's approach to the debt will work? No, not completely. Do I think in some ways that Trump's approach to the debt will be helpful? Yes. Now, this is very difficult now because by making certain comments, some of you may lump me into one category or another, and I don't want to be lumped into a category. I do not feel that I'm a Democrat. I don't feel like I'm a Republican. I see valid arguments for both parties for certain issues, and I see terrible arguments and actions by both parties on other issues. So I don't claim either party. I kind of dance in the middle there, and you know, I wish we had more parties. I don't like a two-party system. I wish we had like a 10-party system where we could really see who would be the best overall. Do I think? And you guys, if you guys have heard me say this many times, that if you look at our debt clock, if you look at the U.S. debt clock, which for those of us that are watching the show live, I'll bring that up here. It's an amazing webpage. It's usdebtclock.org. I'll let this run right here just so we can see how much it increases the national debt when I start this comment. So right now it's 830 million. We'll just keep going. So if you look at some of the actions, like okay, Doge. Some of you hate Elon Musk. Some of you like Elon Musk. Doesn't matter to me. Just don't destroy people's personal property. If you hate Elon Musk, don't destroy a Tesla. You're hurting someone who purchased that vehicle, and they may be the same beliefs as you. That's absurd. However, going through and looking at our deficit, it is a fast track to bankruptcy. Governments are the only entities that can do this without going to jail or filing bankruptcy. Ideally, we want to position ourselves where we are in much less debt. I don't ever think we'll get debt-free, just too much debt going on. But at least we can start to lessen that tax burden, that interest burden that we have. Now, in my opinion, I think some of the things that Doge is doing is correct. I think they might be overstepping some boundaries and going too far. But, you know, would you, I'm curious from your perspective, would you guys rather leave everything the way that it is and continue to just exponentially increase our debt, or go in and do an aggressive chop job on anything that looks like a waste of money, and then if you do cut too far, go back and add those things back in, right? Because I feel if we go down the traditional bureaucracy route of politics, it would take forever to come to any agreement on what should get cut. So part of me kind of likes this mass chop job of like, let's just get rid of stuff, and then we'll add it back as we need or as the globe sees fit. You know, if we need to give aid to certain countries, great, that's fine. But now it just seems like there are a lot of fraud. There is a lot of theft. And when you have blank check systems, the opportunity for theft is just exponential. So I do think we need to start to take a poll. Lisa, it'd be too long for me to type that one in. I'm just curious, who do we owe the money to? We owe money to China. It's funny, we owe money to all these countries. We owe money to a lot of different people, especially if they're holding our debt. You know, we owe them money because they've loaned us money. That's what bonds are, is a loan. Watching what Brett Baylor did with Doge, guys, I know it was very interesting. I didn't see that one, John. You know, again, I do think in some cases they've gone too extreme. I think they've cut too much, but we can always add it back in, as opposed to just letting this thing hemorrhage forever and ever and ever. So by starting at those high-level cost cuts, I think that's an important first step. And ultimately, you know, I think that there needs to be a government agency that is held accountable for spending, right? Not just international aid like USAID, but also government spending, contracts. Again, I mentioned I was listening to Elon Musk's book, and one of the big transition that Elon Musk kind of did with SpaceX was, I get paid per project that I complete as a business. So I'm going to find more effective ways to do it faster at the minimal cost. Whereas now a lot of government projects there is no timeline. I can actually get rewarded for spending too long to do the projects, you know, overage. So yeah, I think it will certainly help. But I don't think it's the one-step cure-all. But got to start somewhere, I guess. Let's see. I don't agree with the chainsaw approach. There's a way and nothing wrong with the independent party doing it, just not someone else who's government grants. Yeah, and that's my argument there, Lisa, is that it just takes too long to get anyone to agree that this gets cut or that gets cut. Okay, but now we're going political, and who cares about that? I'm, you know, part of me agrees with what's going on. Another part of me says, well, we could have done this differently. Let's just keep trading and grow our accounts along the way. All right, so that was your tariff coming up. Again, I'm going to take tomorrow off. So when we reconvene on Wednesday, this will all be in effect. And I'm hoping that these markets kind of just breathe a sigh of relief. And that sigh of relief doesn't necessarily have to be positive or negative, right? That sigh of relief could be a resounding negative where the market's like, oh gosh, and we just sell off, or it could be a nice relief rally. My guess is relief rally. And the reason I say that is just technically, when you look at what the markets did today, it looked to me like a little bit of a relief rally. So let me dive into, so Mark says, government has no incentive to be efficient on projects. Correct, which is why I think there should be some kind of accountability, right? You know, when the government gives out a contract, they should say, this needs to be done by this date. This is the cost that needs to be done by. And if you don't make this date, you as the contractor are now paying overage fees. That's how you would build a house or build a project. You know, you get contractors to commit to a date and a price. We don't have that. And it's like, sure, whatever it takes. Yeah, go. Just keep going. Keep going on. I don't know. United States thinks owes the most debt, with Japan and China being the largest foreign holders of U.S. debt. Right. Yep. Past presidents have said that they want to rein things in and never did because it's hard and unpopular. 100% Big Ab. That's the problem. You can go through a campaign, and no matter which side of the aisle on, you can say, I'm going to do this and this and this. I'm going to cut this. I'm going to cut this. I'm going to cut this. And it sounds great. And I, as a voter, would go, yes, I agree. We need to cut that. We need to cut that. We need to cut that. And they finally get there. And now they got to go in front of the Senate floor and get, 50+% of the votes. Oh, well, sorry, we didn't get what we needed. Didn't do anything. Now they're in the political office reining in a bunch of money because now they can front run their stock trades knowing all that they know. But anyway, balance the budget is first step. Yep, I'd agree, Steve. All right, so how much did our debt go up in that little window of time? We increased our national debt. In the amount of time it took me to make that short little winded statement there, $17 million of new national debt. Isn't that crazy? National debt increased $17 million. I don't know what that was, maybe 7 minutes, 8 minutes, something like that. Insane. Absolutely insane. All right, let's get off that depressing topic and move into something that's a little bit more positive. Actually, it's not positive, is it? What did our markets do for the month of March? Dun, dun, dun. I love the month of March. Beware the Ides of March. It was not a great month. So I am already making mistakes on today's show. Please, I thought I'd be a perfect show today. Oh no, Merlin forgot to update. We'll go March. There we go. Now we can get you the right stuff. So, what do you guys think was number one? Oh, already jumping the gun. He's already jumping the gun there. Way to go, Margaret. Gold won. Yeah, gold. I mean, come on. We all been watching the chart of gold. Let's start at the bottom and work our way up. You guys let me know, which way would you rather do this? So I do the monthly results. Would you rather me show the monthly chart as I do this or the daily? Because I always quote the results over here as the monthly gains or losses. But when I go through them, would you rather see the monthly chart or the daily? Totally up to you. It seems logical to do the monthly chart just because I'm showing you the monthly results, but you guys let me know whether you want the monthly or the daily on this as I go through the results, and I will gladly abide. I got 2 monthlies and a daily. I got a monthly and a weekly, so I got 3 monthlies. The dailies, I got 4 to 2 on monthlies so far. Anybody else? We got a big group here. I got 4 to 2 in the daily. It's a 5-minute chart. Thanks, Margaret. Margaret throwing the curveball. Anybody else want to weigh in on this one? I got 4 to 2 for monthlies. Looks like we're going to go with monthlies then. Okay. You guys are not commenting, so I'll go with monthlies. Monthly. Okay. So we'll do monthly just for this segment when we go through the monthly reviews. I'm all for it. Okay. So let me get some of these lines off this chart here. Of course, futures trader. There you go. You got to show both, huh? I'll show the daily and the monthly, but I'm not going to go the 5-minute. Margaret, you're out. You're not going to get it. Okay, worst performer. Look, I mentioned this before, that that live by the sword, die by the sword attitude with those magnificent 7 stocks. They've been really beaten down lately. Certainly a lot of that coming on the heels of what's gone on with Tesla. NASDAQ was down 7.18% for the month. Ouch, brutal. Now, I'll go and show you on the monthly time frame here. There's your monthly, and it was kind of funny. I don't know if you guys caught the tweet I made this morning. Somebody messaged me and said, do you think that the markets are going to have a rally and get into positive territory for March? I'm like, how do you say politely? Hell no. No way. So we have this gigantic red candle out there today. It's an ugly day. And if I go and show you on the daily time frame, that was a monthly candle, this actually has a great look of more breakdown, meaning more downside pressure. So we talked about that flag pattern, right? That was that big sell-off that happened on February 19th. Again, this is a daily chart. So February 19th going all the way through the low points we established on March 11th was your pole. It had a little bit of a retracement here, a corrective phase, and all of a sudden just started ripping to the south side. Now, we did break down below the lows from March 11th, but we didn't close below it. So it does feel really negative, but if it's going to bounce, tomorrow's going to be a ripper of a day. Tomorrow could be a real ripper of a day based off this pattern right here, and I'll go more into that here as we progress. But that is your starting point for our top 8 markets. And now we go up one level to the Russell 2000, which was just slightly better. I mean, not much better, but technically, check out this on a daily time frame. It looks like a double bottom. Now, again, we don't know it's a double bottom until it actually starts to bounce, but we did start to get a bounce today on this one. Right, nice aggressive sell-off, retracement, corrective phase here, and then for the past 5 days been selling off, but it sold right into those lows. The low point from March 13th was 1,985.5, and today we had a low point of 1,986. So literally right to the dead low from March 13th, and then started to bounce. Great potential buy point here. Again, if you are looking for confirmation, I would say wait for the high of today to be broken, which is 2,038. If you get a break above that, then there's a pretty good chance we could bounce all the way up to 2115, 2120, which, would be about a 90 cent move or 90 point move on the Russell. That could be pretty good. Now, what does the monthly look like? Not as good as this one. The monthly looks real ugly. Right, so we had this pretty aggressive sell-off. I forget why I had the 2038 line on there. I think that was actually one of my target levels. We're actually below that now at 2027. Not a fancy looking chart. And, technically you could make the argument we're still in an uptrend on a monthly. I know. You're like, what? Well, look, you got this nice low here from 2020. You've got higher lows going through. And even though we've had 4 months of just aggressive sell-off here, it's still hasn't really broken this kind of swivel congestion, sideways pivot action that happened here back in April of last year. So looks okay, even though it's an aggressive sell-off. Might be a good buy point here for the Russell. All right, next on my list, moving up, keeping with the indexes, S&P 5.33% slide. Ouch, not looking good. I know, LaMargaret, I got to label those lines. The tough part is sometimes when we do the show, I'm trying to do too many things. I was having a conversation with the designer of the show, and it's funny. He worked over at Ninja Trader for a while and did their show. They've got a whole team that's doing everything. So I mean, that's the dream right there. I don't have to touch a keyboard. I don't have to adjust a chart or scroll or change my zoom or adjust my microphone levels or do polls. I could have someone else do all that. Man, that would be nice. One of these days, maybe that will be where we end up. But for now, we'll just keep it as is. So 5.33% slide for the S&P. From a technical perspective, this looks like it broke, meaning that trend that was in place for the S&P looks like it's broken. This monthly candle is absolutely atrocious. However, let's go and look at the daily time frame here. So today's activity for me, I had bought directional puts, as you guys know. I got stopped out back on Monday the 24th, I got stopped out of a short position, so I went long puts. I got stopped out, and then as we came back down in here on a break down below on Thursday, I ended up opening up a new short position. I closed it out today. So I closed it out this morning as we came right near these lows. I was like, good enough for me. I had a great rate of return for just over the weekend. And I actually ended up going long on the futures side of things just because double bottom. We came right back into this. And it's funny because all these headlines out there, I don't know how true it is. I don't know if you guys saw these ones that are floating around on Twitter. Who knows what the hell is real on Twitter anyway. The talk track was that Jim Cramer was on CNBC and said, there is no dumber time to buy the stock market than today. And I don't know how true that was. I don't watch CNBC, but that's one of the things that was floating around. I tried to find the source of Jim Cramer saying this. There's no better time to buy there's no dumber time to buy than today. I was like, oh, well, that's a green light. I mean, load the boat when Cramer says there's no dumber time to buy. So yeah, it was a nice intraday move there on the S&P. Unfortunately, I didn't carry it home overnight. I don't like taking my futures home overnight. It's just not for me. So it was just a day trade, but it ended up being a really a nice day trade, especially since I got out of a short right at the bottom here, and then it caught most of this move to the upside. So very happy with the way that my day went. But I'm looking at this the same way I would the NASDAQ and the Russell. Obviously, they're going to have a very similar picture. You already had a pretty significant bounce up here, so I would keep your eye on this red line here, which is at 5,672 3/4. That is the high for today. If we breach that, and I think there's a very good chance you're going to come up to this most recent high, which is about 5,800. So that's 150 points up. Could be some great opportunity there for the S&P, a 150-point move. All right, next on our list, our next victim, because there's a lot of victims this month, the dollar index, the Dixie, down 3.15% on the dollar index. Let's bring that bad boy up here. So here is your daily of it. So, we've had some pretty decent fluctuations, but it's this big sell-off that happened at the beginning of the month that really hurt the dollar index. Honestly, I feel like it's been somewhat flat for the past couple of weeks, even though it's been moving up. But that's just because of this giant sell-off we had here starting on March 3rd, 4th, and 5th. That was a bulk of your big sell-off. Now, the monthly time frame candle looking a little bit different, but you're right back in kind of neutral range, right? If you look at that as being somewhat range-bound, today's action right around 104.17 puts us kind of in the middle of that range. Okay, like a almost perfect 50% retracement off this last move. Let's pull up the fibs. Am I right? Is this a perfect 50% retracement? It's pretty darn close. It's about a 61.8% retracement, so I wasn't close. But anyway, with that big weakness of the dollar, this should have acted as a bit more of a catalyst, in my opinion, for the equity markets, but we didn't get that. I mean, equity markets were way worse than that dollar index. All right, moving on up our list here, Bitcoin. We'll talk more about Bitcoin and the acquisitions by Michael Saylor and what he did today. This is kind of a weird-looking chart. This is why I don't like using the futures for this one. You notice that the gap up that happened from, the end of the month gap up was huge on this one. And that's could have a lot to do with rollover. So I should probably do this from this price chart here, which now is a completely different animal. It actually shows that 1.96, not completely, but somewhat different. So 1.96 was the actual drop there for Bitcoin. If you look at this price chart on a monthly, I'm still bullish on that chart. That looks great, right? You're still higher highs, higher lows. It's the daily time frame that makes you feel a little uncomfortable with this one because it just hasn't managed to really get a full head of steam and move to the upside. Now, we talked about this kind of channel that it's been in for about the past 3 weeks. Well, technically, we're outside of that now. As of Saturday, we kind of knifed through that one, and we're sitting here just going sideways. Michael Saylor did buy more Bitcoin. I'll talk about that one here in just a second. And I've ruffled people's feathers on social media, as tends to be the case. People always going, oh, well, he bought it all over the counter. It's over the counter. That's where people go to buy big stuff and don't move the market. Do you know how it works? Do you actually know, or you just read what Wikipedia told you about how over-the-counter markets work? Most people, that's their only experience with it. Yeah, it's where you go to not move the markets, but you are leaving footprints. Bitcoin is more trackable than a share of Apple. So when you make a transaction, everybody knows where that Bitcoin came from and where it's going. Because remember, Bitcoin does not leave the blockchain. Bitcoin never leaves the blockchain. It stays on the blockchain. So it must move from one point to another. on the blockchain, which means there's an address that had Bitcoin move from this location to this location, and those transactions are 100% transparent. My argument is that Michael Saylor is buying all this Bitcoin. There's no transactions that are showing up that even come close to the numbers, which means that Fidelity and Coinbase, who he has custody of crypto there, they're doing ledger entries. They are not buying anything on the open market. They are simply moving it from one account at Fidelity to another account at Fidelity. And it may not even be there. For example, let's talk about fractional reserve banking very, very briefly. Yeah, I try to make friends on X. I think this is critically important. So in the example that you and I have done before, the bank, I deposit $10,000 into the bank. 10 grand, boom, and I earn my 0.01% interest. Then Steven says, hey, I need to get a loan for a car. So he borrows $10,000 from the bank. He pays 8% interest, right? Steven goes and buys a car from a dealership, used car, Carvana, whatever, for 10 grand. Carvana, having received $10,000 from Steven, takes that deposit back in the bank. How much money does the bank have now? Should be pretty simple, right? They've got my initial $10,000. They've got Carvana's deposit of $10,000. The bank now has $20,000, right? Would you guys all agree with that? The reality is they only have 10 grand. They've lent that out. And the thing is, when Carvana deposits that $10,000 again, they may lend that out to Lisa because maybe she wants a HELOC. So they give her a $10,000 home equity line of credit. She deposits that at the bank to use when she needs. Now the bank has $30,000, but they really only have 10. It's leverage of instruments. So this is what's happening with crypto. It's the only explanation I can come up with. It's not this freaking OTC market that everyone keeps talking about, because there's no way you have this infinite supply of Bitcoin that doesn't move and has no records of transactions. It's not possible to have zero record of transaction of a Bitcoin transaction. It's always recorded. So don't throw this OTC BS at me. There's still going to be movement of that Bitcoin on the blockchain. The only way that you could move Bitcoin from my account to, let's say, Margaret. Let's say I bought 10,000 Bitcoin from Margaret, okay? The only way I can make that transaction with that Bitcoin never moving is if Margaret literally hands me a piece of paper with the address and the public keys. That way, it hasn't moved on that blockchain. Now, you guys tell me, would that be a smart idea or a dumb idea? If Margaret just gave me a piece of paper, I bought, what did I say, 1,000 Bitcoin? 10,000 Bitcoin? Whatever. I'll make 1,000, makes it easy my number. If I bought 1,000 Bitcoin from Margaret and she just gave me her private keys, is that a good idea or a bad idea? It'd be an idiotic idea because Margaret still has the private key. It'd be foolish. So there's no way you can tell me that this transaction happened that way. It's not possible that Margaret would willingly give me her private, she would give me the private keys, but I would take it and I'd move it to my wallet where I control the private keys that nobody has ever seen. So these people that are telling me, oh, it's over the counter market. Yeah, some big institutions got 50,000 Bitcoin and they just handed it over. It has to move. There has to be a transaction. There has to be a wallet address that Bitcoin moved from. It did not happen with Michael Saylor. Anyway, I'll dive into that one in just a second. It literally gets me worked up because Steve just said it. He says, this is what makes me nervous about crypto. I think there could be a reckoning coming if there's a small run on Bitcoin. This makes me very nervous about Bitcoin because what it's done is now open up this possibility of more than 21 million Bitcoin. The premise of my entire hypothesis about Bitcoin is 21 million Bitcoin. There will never be any more and there will never be any less. Well, there may be less because people lose it. However, if what I believe is happening with Bitcoin and crypto in general is happening, then that means that there is no limit on Bitcoin. There could be 1 trillion Bitcoin because a bank can sit there and go, do you need some Bitcoin? How many need? 50,000? Do we have it? No? Okay, that's fine. Here you go. Here's 50,000 for you. Here's 20,000 for you. Here's 20,000 for you. 80,000 for you. Here's 1 million for you. They're just saying that they have it. And their customer's like, cool, I bought it. But they haven't bought anything. They bought a ledger entry. They bought fake vaporware Bitcoin. It's kind of like the Federal Reserve can kind of manufacture Bitcoin out of thin air, or manufacture dollars out of thin air to buy whatever they need. It's exactly the same thing. Conveniently now that the financial institutions have access to it, Federal Reserve, thank you very much, all of a sudden we have this possibility of fractional reserve banking going on with Bitcoin, and that makes me damn nervous. So if you want to fix this problem, what you need to do is you need to contact Michael Saylor, and you've got to say, hey, Saylor, just contact your Coinbase, contact your Fidelity, and say, I would like you to send all of my Bitcoin holdings, all 528,000 Bitcoin, to this wallet address right here. This market will lose its freaking mind. It is actually a systemic risk. I don't think people understand that if what I believe is true, and I'm really leaning towards like a 90% probability that what I'm saying is true, that it could create a run on these institutions. And I think you mentioned that here. Steven says small run will turn into a monstrous fall. Yes, because what's going to happen if Michael Saylor, let's say he has 200,000 Bitcoin sitting at Coinbase, and he says, I want them all now. I want my money out now. It's like a run on the bank. Because if they are fractional reserve lending out this Bitcoin at Coinbase or Fidelity or whoever is custodying his crypto, they're now going to have to go, oh, shoot. We have to go buy this now on the open market. And what do you think that's going to do to price? It's going to skyrocket Bitcoin, but my guess is they'll probably declare bankruptcy first because it could cost them tens of billions of dollars. Crazy. The dark pools for crypto futures trader are simply these over-the-counter markets. Lori says, should we get rid of our crypto? No, I don't think we should get rid of our crypto. Yeah, I don't think we should get rid of our crypto. I certainly think there needs to be some investigation done into how this is all really working. I'll let you know. It's interesting. Do we sell our crypto? I don't think I ever want to get out of crypto. I enjoy it, and I think that there's tremendous future here. But there is a potential for big red flags, big problems. Right now, Lisa, with my Bitcoin, I'm just keeping my Bitcoin. It's still on cold storage. If I move it or sell it or do anything with it, I'll let you know. I'm not going to do anything until we get near the tail end of this year. That's what was my plan initially. But you know, when you have a Senate and a House of Representatives that's now pro-crypto, you've got a brand new Secretary of the Treasury who's screaming pro-crypto. You got a president who's screaming pro-crypto. Same with the VP and the chairman of the SEC and an entire SEC administration who's been backpedaling and removing all the lawsuits, cleaning their slate. This is the gold rush for crypto, yet we've done nothing but go down. So there has to be something that's absorbing demand, because demand is really high right now. I mean, I've seen more people get interested in the cryptocurrency program than ever because of all that's going on politically right now. So you guys all know the fundamental driver of price is supply and demand. Demand is off the charts. Demand is parabolic. So the only way that you fix parabolic demand and push prices down is you have more supply coming onto the market than demand. The only way that can happen is if you're artificially creating supply. That's my take on it. And until someone proves me wrong, and I'm very happy to admit that I'm wrong if the facts prove it. But you know, you look at this price chart of Bitcoin here. You know, we've sold off quite a bit. I'll go to this peak back here on January 5th. You know, we're currently down 24%. And this is on the heels of some of the most positive news in the history of cryptocurrency markets and action. Strategic Bitcoin reserve, digital asset stockpile. It does not make sense. Does not make sense. Let's see. What does Steve say? You can't convince me that these people know much about what's behind the scenes of crypto, or they would be shoring this up. Heading for a 2028 financial crisis only with Bitcoin. No, I wouldn't just label Bitcoin in there, Steven. Don't just put Bitcoin in there. There is that potential. And it does make me nervous. And I'm really kind of looking forward to my hypothesis working that we're going to get a big rally this year, which I do. I do still think we're going to get a big rally. But man, if they can just fabricate Bitcoin or Ethereum out of thin air and push prices down, it opens up two things. Number one, fraud and deception. And number three, massive market manipulation. So Margaret, where do you store your Bitcoin? Would this answer your question, Merlin? Yes. So I keep mine on a ledger. So mine's on a ledger, and I have 3 ledger devices that store Bitcoin. So this is just one of them, but I have 3 different devices. And again, if you're going to try to break into my house and rob me and steal it, you're not going to get it. The private key isn't here. So the only way to access this is with the private key. So it would do you no good. I would happily give this device to you with all my Bitcoin on it. Not going to happen. Oh, Michael Saylor. Yeah. So, you know, I mentioned that you can go out and you can check people's accounts here. I'll just show you here real quick what I was referencing. So if you go out here, these are the largest Bitcoin addresses. And you can see here, there's $20 billion in this wallet, 12 in this one, 11 here, 10 here. These are billions of dollars. And these are people who have labeled their account. So you have Binance, Bitfinex, Robinhood. I mean, Robinhood's got their wallet right here. So we know that right now, Robinhood has 140,575 Bitcoin worth about $11.6 billion. And it's right there. And you want to see all the transactions? You can see how they've been building their accounts, stockpiling just by clicking on this link. I don't see MicroStrategy in here anywhere. There is no MicroStrategy address in there. MicroStrategy keeps their Bitcoin in an undisclosed location, but from all the data that I've read, it's Coinbase and Fidelity. Coinbase and Fidelity are the custodians for MicroStrategy. So there you go. If Michael Saylor gave me an address where it like this, let's say Michael Saylor showed me an address and said, this is my address, and every time he made a purchase, we got to see it go in there, then I would 100% believe every word that comes out of his mouth because it's transparent, visible, and accountable. I could see it. As it stands now, he makes statements like this. Oh, I didn't put it on here. He makes statements like he posted today that he bought a whole bunch more Bitcoin. I'll get to that here in just a second. Top 4, it didn't have as much as I know, Steven. That's what I'm getting at. How can you say you have that much? There's no proof of it. That's a red flag. That's a red flag. Anyway, I'll get back to that in a second. And Michael Saylor, let me wrap up our top 8 markets here because we talked about Bitcoin. Technically, Bitcoin still looks okay, but has me a little bit concerned with its price action. MicroStrategy owns 528,000 at this moment in time. Number 3 on our list, the 10-year yield. 10-year bond yield. We're back in positive territory. Yay, I got positive territory stuff. It's sold off now, but for the month, you are actually positive, just ever so slightly. Now, that 10-year yield obviously is impacting housing markets. We've seen some better than expected housing data. Which is great. Selling off here just a little bit down below that trend line. Look, if you're bullish on the markets, you want this to continue to drift lower. That's a good sign. That'd be good for the government because it means less interest payments. So we want to see this 10-year yield continue to drop for the month down, or say up 0.1, but still looking fairly weak there. I'll bring up the monthly for you. There's your monthly. So really kind of sideways, hasn't done much for a while. Next on our list, crude oil. Oops, I didn't show you the chart. Crude oil, 2.35% gain for the month. Let's go look at CL. I know, Laura, I messed up on that one chart. It's back now. Technically, from a monthly perspective, this looks pretty bad, right? This looks pretty bad. It's just like flatlining. This looks like a giant descending triangle, in my opinion. Descending triangle obviously means more pressure to the downside. And as you guys know, I'm bearish on crude oil, for the remainder of the year. Now, on a daily time frame, we've had a great bounce, right? Really nice bounce. We'll probably, and we talked about this the other day as we broke down some pivots here, probably heading up to that 72.50 mark. So that's probably where we're going to get to here shortly is 72.50. Right now we're at 71.48. So the trend looks great for this uptrending move, but if we continue to drill, or start to, drill more, supply is going to come out of the marketplace and this should continue to drift lower. So even though it was a great month, I'm bearish for the remainder of the year. And finally on our list, gold. We all know gold is number 1 and by wild margin. I mean, gold has been absolutely fantastic, just ripping to all-time highs. And I did remember we had a couple comments from viewers saying, hey, maybe we shorted in April. You're shorting some at all-time highs. When you're in uncharted territories, typically what happens are things there's no resistance. There's nothing to slow it down. So right now, I would not be going against the price chart of gold here. I'm loving the price chart of gold. I wish that I bought gold bars as opposed to those silver bars because silver hasn't done as well. Silver's been kind of stuck here, not getting all-time highs. All right, so let me have a little bit of fun here with some graphics. That was your top 8 for the month of March. So I asked Midjourney. So you guys know I do most of my graphics here with Midjourney. And I asked it to draw a picture of Michael Saylor sitting on a mountain of Bitcoin. But then I thought, I'm going to try different things. So I tried Midjourney, Grok, and OpenAI. And here are the results for it. I said, give me Michael Saylor sitting on a giant pile of Bitcoin. These are all the exact same prompt. This is Midjourney. There's Michael Saylor sitting on his pile of Bitcoin. This is ChatGPT. Actually came out pretty good. The hands look good. The face is a little bit off, but I like how it really made a pronounced Bitcoin. I like the black too. And then here's Grok. Grok actually got the best looking Michael Saylor. Like, that looks pretty good. He's got always got that 5 o'clock shadow. His teeth are kind of yellowed. He's got, this is probably the best one, but it doesn't really convey that that's Bitcoin in the background. It looks like gold coins. So we get ChatGPT winning for the obvious Bitcoin, and then we get, Grok winning for the best, most realistic. Anyway, I wanted to show you this because he did add more to his stockpile, and right now they are at 528,185 Bitcoin. What I would encourage you all to do is, if you are interested in what, the consumption patterns of Michael Saylor and MicroStrategy, add him on Twitter. Follow him on Twitter. So here's his page. You just type in @Saylor. I'll even copy it into chat here. Of course, if anybody here is on Twitter, you should follow me, just because I can. That's Michael Saylor's Twitter handle, and every time he makes these purchases, he posts. And it says, MicroStrategy has acquired 22,048 Bitcoin for 1.92 billion. He gives us average price of 86,000, and to receive Bitcoin yield of 11%. He now holds 528,000, and his average price is 67,458. Now, I like this chart here because they post this one as well. It shows their acquisition. So you can see now the acquisitions of Saylor over time. Obviously, some really big transactions started this off back in 2020. Those are his best ones, down around 10, 12, 13,000. He's been adding over time. Of course, now gone absolutely crazy up here at this moment in time. And no problem, Lori. You don't have to follow social media. It's okay. Social media is a cancer. It's bad. It's bad. You gotta know what to look for, what you're interested in, and just kind of be careful who you follow or who you go to. Anyway, what scares me a little bit here is notice that the parabolic move, and I know the podcasters, you can't see this one, but he was right around at 40,000. That was their average price back in November of last year. And then all of a sudden, huge acquisition. So their average price was 40,000. Now it's 67,000. So they're really just bringing up more and more and more Bitcoin. They've been buying a ton up here. In my opinion, and this is just part of the reason why I've been so adamant about this shenanigans going on behind the scenes, is you guys can see how much he's buying. He is buying colossal. This is billions of dollars. And it's been moving down off that. It's just kind of surprising to me, but markets do act in strange ways. But that's why I just think that there's some manipulation. Right now, he's got $42 billion worth of Bitcoin. Pretty impressive acquisition. So that's where Michael Saylor stands as we speak. Is he a genius? Is he just psychotic? The verdict is still out on that one. But if we see this continue to drift much lower, it could create a lot of problems for Michael Saylor. Now, for example, if you see here, that number, if it gets down below 67, that may cause some problems depending on what the terms and conditions are of the purchases that he's made. Remember, some of this was done with convertible securities. Others was borrowed with loans collateralized with Bitcoin. So, there's a hodgepodge of ways they've raised money over the past few years, but they are buying and buying more and more and more. Yeah, and I saw someone mention GameStop. Let's go look at GME. I didn't follow GME. What was it up today? 2%. Yeah, it was up 2.7% today, but it's also fallen 1.3 in the after hours. Yeah, generally as a trader, they kind of want to shy away from stuff that looks like that. That's just kind of wild craziness that'll just get you in trouble. All right, what did Jeff's stat say here? Jeff, where did you get that stat? What was Jeff's stat? I'm looking back here. What'd you see, Jeff? Did I miss? No, I don't see Jeff's comment in here. Sorry. All right, I'll keep moving on. And what else did I have on there? And then, the last part here as I wrap up, we'll talk about the technical bounce. Unless you guys have questions on the Saylor issue, we'll continue to discuss it. I reached out to someone who I think is probably one of the better digital investigative journalists out there, and just said, here's the facts as I see it, especially as someone who's been trading a long time. I do understand how dark pools work. I do understand OTC markets, and a lot of people been going off of me on Twitter or X about the over-the-counter market, but I think that a lot of people don't. You read an article on how an open market works or over-the-counter market works, and I'm an expert. No, you're not. Most people don't know how it actually works. There's 3 different types of over-the-counter markets. Either way, someone's acting as an intermediary and a broker for you, lining you up with big buyers and sellers. And if I knew that someone is going to come in and buy $1.9 billion of an asset that's very limited, and I had some of that, I would not sell it at market price. I would sell it at an elevated price, and that's not reflected. Neither of the transactions that happen. Oh, yeah, I read that too. There was a cool graphic today on how many mortgage delinquencies there are. Yeah, so maybe start, saving up a little bit of cash here. If we start to see more downside move in the equity markets, that'll be more pain, layoffs, etc. Could cause more people to lose their homes. Does create opportunity down the line. GameStop had a huge line outside. Oh, it was probably Pokemon. I don't get what's been going on with the whole Pokemon card things. It's just insane, but hey, to each their own. Sees if it drifts lower, maybe that will spur him to pull his off the exchange, which would make price blow up if it doesn't bankrupt the exchange. That's the big concern I have, Steven, is if he decides to pull it off of Coinbase or Fidelity all at once, and it is this fractional reserve lending that I do believe is going on, yeah, it could cause a lot of problems internally. Which is why I tell everybody, just take your crypto off the exchange. If you know you're going to hold it for 6 months, just take it off. Because if you keep Bitcoin at Coinbase, it's part of this pool of liquidity that Coinbase is using. It's a leverage ratio. So silver's been good, Juan, but not as good as gold. Not as good as gold. So technically, I actually really like today, and mainly because of this pattern right here. Now, we could look at the Russell and the NASDAQ in a similar light, but I love this technically because we came back down right near those lows. We've had this 55.09 mark on the calendar on this chart since we bottomed out here on the 13th of March. So it's not, it's only 2.5 weeks, but we came right down towards it today. Our intraday low for today was 55.33. So we were a little bit higher than that, about 25 points off. Not bad. We'll take 24 points off of those lows. Fine. That caused me to jump out of my short on the S&P, decide to go long. If we do get a rally back up to that 58.40, I will actually look back at opening up a new short position and shorting some more of the S&P, but I'll continue to be day trading the futures because who the heck knows what's going to go on with these markets. It's wild. But what Saylor realized as the house of cards, if your suspicion is correct. So Lisa, what Saylor would do, if my suspicion is correct, Saylor should never pull it off all at once because he knows he could really hurt himself. But what he should start doing is just saying in 10,000 chunks, right? He should just, I'm pulling off in 10,000 chunks. I'm going to pull off a little bit more, a little bit more, a little bit more, a little bit more, and ultimately get to that point where it's the exchanges and custodians could see it coming and have some time to prep for it, as opposed to a complete outright run. As you see his stat here, if he in fact does have 528,000 Bitcoin, he pulled it all off at once from multiple exchanges or custodians, I think that's a systemic collapse. So I don't think he would do that. I think he'd be a little bit too, he's smart enough to know that would, well, I don't know. I say he's smart enough to know that would impact the market, but let's be honest, if he was smart, he would already be taking it off these exchanges. And maybe there's some kind of agreement, we'll give you better pricing, but you got to keep it on the exchange. That could also be. I obviously am not privy to any of the documents that have been signed for these transactions, but if Saylor's smart, and I do believe he is, he's got to know that he's now part of this fractional liquidity. If he starts to pull it off of those exchanges, it will force these custodians to go to the open market and buy it, or go to the OTC market, as everyone keeps saying. Okay, great. There's not enough at the OTC market to substantiate these transactions. So, yeah, it'll be crazy. Jaji, did he mention a few months back that he was using programs to fill his orders in small bites? Yeah, so typically what you do with, it's called a slicer. There's all kinds of different terms for it. But typically what someone will do when they're buying such mass, like, today, or last few days, he said he bought 22,000 Bitcoin. You're not going to buy 22,000 Bitcoin all at once, right? Let me just show you here why I know that to be true. So if we go to Coinbase, we can actually go and see their market depth, their liquidity. So if you were to buy 22,000 Bitcoin right now, how far would we move price? Well, let's go over here. This is Bitcoin spot. And you can see right over here, there's a number on the right-hand side of your screen that says 157. If I bought right now with a market order 157 Bitcoin, I would drive the price of Bitcoin from $82,550 up to $84,193. So just buying 160 Bitcoin would drive the price of Bitcoin up $1,500. Now, if I zoom out here, I can look at bigger numbers. And you can see he bought 22,000, right? Okay, he bought 22,000 and the market didn't move. It actually went down. So here's why this is shenanigans. Right here, you can see the number. It's hard to read. I understand. Some of you are on your phone. So if I were to buy 4,600 Bitcoin right now, instantly, just did a buy button, said 4,600 Bitcoin, I would drive price up to $144,000 per Bitcoin. That's a 74% price increase. If he only bought 4,600 Bitcoin, but he bought 22,000 somehow mysteriously, and it didn't even move up, it actually moved down. So I hope you see my point here, that if Coinbase is displaying, this is their liquidity chart, this is their depth chart of the volume on their exchange, and if I bought 4,600, I'd move it up 74%. How can this guy buy 6 times more than that? 6 times more than the maximum available at Coinbase and not move it a dollar? This is some magic that I want. I mean, my name's Merlin, and I still don't know that magic. That is some crazy magic out there. So, Fidelity might be a partner here. Coinbase certainly is. Maybe even got ties with BlackRock. I know he's got institutional connections, but the liquidity is not there. It's clear as day on their chart. So that is bad stuff. What is so? Let's see. Investors that want to take out Saylor, for example. If anything, this could be an institutional play. So if you wanted to, you could take out Saylor here. How do you do it? You force Bitcoin down. You force a collapse of Bitcoin. Now, remember, if they are fractional reserve creating Bitcoin, like the Fed creates money out of thin air and they can create Bitcoin out of thin air, then all of a sudden you could push Bitcoin's price significantly lower. Guys, you might remember a story that happened here several years back about a stock that had, I forget the exact number, but I'm going to use a number which is easy. Let's just say there was 140 million shares of a stock, right? That's all the shares that existed. 100 million shares of a stock. You guys type in the chat. If there is 100 million shares of a stock, what's the maximum number that you can short? What's the maximum number? Meaning you went out there and you literally borrowed every person's shares who's long, assuming they were available. You borrowed 100% of all of the shares are out there and you shorted it. You could only short 100 million. If there's 100 million, maximum you can short would be 100 million. To Big Eb's point, with GameStop, it was 140 million. It was 140% of the total outstanding shares were shorted. How is that possible? That's a mathematical conundrum that regulators never checked. How could a broker, E-Trade, Ameritrade, Schwab, Fidelity, lend out more shares than they had? It's called fractional reserve lending. That's exactly what's going on with Bitcoin. Exactly what's going on. Yeah, crazy. So yeah, they could manipulate it. They could crush Saylor if they wanted to. They could just openly sell Bitcoin on the open market and crash the price of Bitcoin, which may be what they're doing. I think the sad part for me is it changes the dynamic of numbers. It changes the laws of math, which is to me the cornerstone of what Bitcoin functions off of, is just pure math. Now it's just a speculative investment that institutions can now manipulate. So, all right, let me dive into our calendar. Today was kind of boring. Actually, coming up tonight, you have a rate announcement. So for anyone who's interested in currencies, if you trade that Australian dollar, let's see, my Forex should be right there. If you're trading that Aussie, you have a rate announcement happening. They're expected to stay right at 4.1%. That's going to be at 11:30 Pacific time, right? So 11:30 tonight, that announcement comes out, which could create big moves here for the Australian dollar. Just keep that one on your plate. And then tomorrow, which is April 1st, again, no show tomorrow. But if you trade in U.S. markets, as I will probably spend more time trading tomorrow, you have ISM manufacturing prices, you got construction spending, total vehicle sales, you have ISM manufacturing PMI, JOLTS job openings. As we start this week, a lot more jobs data. Of course, Friday is the big unemployment rate number that a lot of people are anticipating. So that is pretty much it for today. Really, the earnings calendar is nothing exciting to look at. So as I wrap up here, let me see. Back to my earlier comment. If that happened, is it possible that they are being kept on hundreds of different wallets from Jeff? But at the same time, so in theory, yes, they could keep it spread out on a ton of different wallets. But remember, if you're doing it all in self-custody, the more wallets, it's like Biggie Smalls, right? More money, more problems. The more wallets, the more potential issues you have. Now, if I was Michael Saylor and I had 550,000 or 528,000 Bitcoin, I would probably put them into 100,000 chunk wallets. I would have a few, right? But not like tens of thousands of different wallets out there. What am I doing tomorrow? It's April 1st, and I don't like prank days. I hate prank days. People try to prank me, and the media pranks everybody, and all the headlines sometimes are fake, and you get fake news and fake stuff. I just don't like it. Not a big fan of April Fools, so I'm just not going to do a show. That's why, Margaret. I have a really busy morning with a lot of meetings and stuff, but yeah, that's the main reason. This is why I need your help setting up my Bitcoin node. Bitcoin node is pretty easy, Mick. Bitcoin node's pretty easy. You just download the Bitcoin Core software, and you're done. That's a node to keep a copy of the ledger. If you want to set up a mining node, that's a different story that I don't have expertise in, unfortunately. Would it be better on physical gold to avoid those shenanigans? Yes. In that sense, Andres, that gives gold a huge advantage. And I do think that might be why you're seeing gold rally up so much. I think there's people way smarter than me that understand that there's some real shenanigans being played here. That there's starting to see more manipulation, because you just mathematically, you can't buy that much Bitcoin and not move price up. Again, I think the example I showed you here for Coinbase is, it's a basic example. Now, again, Coinbase is showing you just the retail platform. I'm sure there's an institutional side of this where if you're a big player, you'd have better liquidity. But still, 4,000 Bitcoin could move price up 75% of Bitcoin. Yet this guy bought 22,000. It didn't even move a penny. It actually went down. It just seems strange to me. Morgan Stanley went directly to investment banks when they shorted mortgage-backed bonds. I don't know. Lisa, it's not an April Fool's joke. I'm not streaming tomorrow because I hate April Fools. I don't even want to be a part of it. I don't want to be victimized. I don't want to say something on the show that might actually be fake news. I'm not doing it. Not doing it. Oh yeah, Big Eb says check the premium on your gold coins these days. You be pleased. The thing is, I'm not selling. Like with those gold, I actually love going and looking at those gold coins. I have a few that are like really old from the 1800s. I'm never gonna sell those ones. Never gonna do it. All right, everybody, that will do it for me for today. I hope you enjoyed. Sorry I'm not doing a show tomorrow. I know. It was one of those ones people seem to target me for getting punked on April Fools. I hate it. Not a fan. So I hope that you don't, I'll be tweeting tomorrow for sure. I'll be trading and tweeting tomorrow, irritating more people about Bitcoin and Michael Saylor. See if I can get people to block me. No, I'm just kidding. I'm not trying to get anybody to block me. But anyway, that will do it for me for today, everybody. Again, if you have comments, questions, feedback, things you want me to discuss, you know what to do. Email me at tradermerlin@gmail.com or put your comments down below any of the YouTube videos. As always, I appreciate you guys' support, so hit the like button, subscribe if you're brand new. I will see you guys on Wednesday for the big stuff, where Mr. Trump's next act was the topic of today's show, and I think that'll be a pretty exciting day on Wednesday. So we will see you guys on Wednesday. Take care.